Hello, everybody. This is Noah and John, and we are from UrbanDigs, and it is Friday. So you're going to get your weekly Manhattan market update. John, let's get right to it. I'm looking at Manhattan supply elevator going down 57.54. Show me that chart.
That's right. No, that's almost 4% lower from last week, which was already 3% lower from the week before. That was a holiday week. So supply is rapidly dropping off at this point.
Yeah, this is starting to become a trend, John. And again, I think there's a narrative growing that there is a developing supply problem. It's definitely too early to call it a supply problem, but there's a developing supply problem. We talked about it a few weeks ago with that net inventory deficit. That is in full effect right now. We'll see where we go, but that four handle is getting closer and closer as time goes on. John, let's go to Manhattan real estate demand pending sales 4319. Show me that chart.
Yeah. So typically, I mean, we're down almost 2% from the week before. So if you want to look at pending sales, it usually sort of dips into the end of the year, but it's really not dipping that much, Noah. We had Thanksgiving was actually up. That week of Thanksgiving was actually up from the week before, and now we're a little bit down from that week. So pending sales essentially is just going sideways still.
Yeah. And I mean, if you think about what's going on here, supply is going down, pending sales is going up, and that means this market pulse is going higher. That means the real-time market, that buyer window, John, that we were discussing was available about 6, 7, 8 weeks ago. It seems like it's closing in real time. I'm actually seeing it in real time as we speak. Let's go to the weeklies, and I'll just make a quick note right over here. We are missing a day of data. We have successfully migrated to the new Revenue RLS feed. That is big news for us. It's something we've been working on for a long time. So, Johnny, you're going to go show the real data that has the actual full number. The supply for 1 week pace, Johnny, is?
It's 246. So last week was 121. That was a slow week. So we're at 246 this week. If you compare that to the number from a couple of weeks ago, which is 301, we're down by roughly almost 20% from that number. So supply on both a weekly and an overall level is, as you mentioned earlier, taking the elevator down.
Yeah, and that would make sense. Contract signed. Again, we're going to listen to Johnny this time. We're not looking at that ticker. We'll have that backfilled soon. But Johnny, contract signed for 1 week. What was it?
It was 231. Last week, no, it was 236. That was a holiday week, wow. 236. This week, a little bit less, 231. And again, you'd normally expect these numbers to sort of ebb off heading into the holidays, but they're still hanging out there over 200. Not necessarily the over 300s that we were seeing through mid-November, which was an amazing month. And especially when you look at the luxury sector. I mean, I don't know if you have that, the pending sales chart for luxury, if you want to show folks that, but that was an amazing month in terms of what was signed into contract and what was not, but especially for the luxury sector, it was just literally off the charts.
Yeah. At first, let me show you what Manhattan pending sales overall did. And this is what that chart did. And if I go edit that now and look at that 5 to 10 million sectors, so let's exclude super luxury and let's go one notch above the luxury because I don't have that threshold here. It's the closest I got. And that is the chart that you're talking about, Johnny. And that is the move right over here. And you could see that we're rebounding in this sector. And again, I would agree. The data is supporting you. The luxury sector is leading the way. It's great to see 230 contracts signed in December on a weekly level is an incredible number. It's very elevated versus seasonal. And when you take into account that supply is dropping, this is why inventory is falling. We have that net deficit going on. And yep. Johnny, we pulled up this really cool chart, right? The case to list now. We would normally never say this, Johnny, because I mean, it's December. You got the holiday season and people are going to start slowing down. They're not going to go out during Christmas and New Year's and all that kind of stuff. What is the case to list now?
Well, so what we did know is that these blue and red shaded areas, that's sort of the inventory lines. The blue one is sort of the fresh inventory that's been on the market for less than 30 days. And then the red one is the over 30-day inventory. Now, typically, if you look at those main vertical axes, what you're going to see is you're going to see a run up into the end of the year, November, October. That's when inventory builds, and then it quickly falls off. Here, we're basically seeing that fall off. We never really saw the build. And if you look at that black line on the bottom, that's contract signed. So it's quickly approaching the number of fresh listings, right? So that contract sign number is about to intersect the under 30 days inventory number. And what that tells to us is, you know what? There's so much missing from supply right now that if you are going to list, yes, you are probably going to suffer less traffic because people have things to do, but you're not going to have the competition you would normally have as a seller. And you actually might have a good chance at snagging a good deal here.
Yeah. I mean, that's a great point. I'll just add in here because I know it's a lot of lines here to look at. when I look at this blue line, let's just focus on this blue line, right? Because that's the fresh stuff.
Yeah.
That's the new inventory and the level of new inventory coming in. It looks like it's just like an echocardiogram, right? And what that is, think of it as waves, right? Waves to an ocean, right? And right now we are in low tide. Okay, that's a good way of thinking about what's going on. When are we going to get to high tide? Well, lucky enough for you, I went in here and I looked at all these high points. I looked at every single one of these high points. And basically what you got to, February and March and into April is when high tide comes in, starting in February. So you have, again, a good 6 to 8 weeks, John, until the next wave of that fresh inventory burst. I'm not saying fresh stuff is not coming on. I'm just saying it's at a low point, right? And in the wave cycle. And that's what that blue line leads. And what's making it even tougher is that the contract signed in black, while we're in low tide, the contract signs high. That's what's making it tougher.
That's right. And if you want to look at the places where the contract sign number has intersected that 30-day, under 30-day number, where was it? 2013, 14, 15, peak times. And if you remember,
right over here.
If you remember those summers when it was the busy season and there was just absolutely listing discount was a thing of the past. It was cash offers, first, best and final on the first open houses. I'm not saying that's what's going to happen, but if you are the only place on the block, especially in those luxury sectors, this might be an interesting holiday season to list.
Yeah, I agree with you. This is a chart I would like to take a look at in another couple of months and see what these indicators in combination with each other, what that message is telling us, because this is a new one for us. Good job, Johnny. I really appreciate this. That is John Walkup. I am Noah Rosenblatt. We're both of UrbanDigs. Don't forget, guys, if you got questions, we have answers. Please visit our forum. If you want any of the charts from today, please visit this section right over here. Other than that, this has been your weekly Manhattan market update, and we'll catch you next time.